have a great week, Face. Everyone doing okay? Hope everyone had a great weekend. Scott Pickering just sent me a message. He goes, Dale, this is cool. Flying back to Canada from Hong Kong at 33,000 feet, just past Tokyo, listening in. So even being on a jet, you can listen to what we're talking about here today. Have a safe trip home, Scott. Glad you could hear what we're talking about today. And of course, I want to start with the euro here. We talked about it. Too many bears down here. Had this pop into the NFP. Then on the NFP, the market tried to break back towards this 112 level. Now we're challenging this 1250 level. So let me just draw a horizontal here. It looks like a pretty big area. Draw it against today's high. There you go. So about an 80 pip advance from here to here. 80 pips here is going to give you the 113.10 handle. So as I was saying for the last week, everyone thought that a dollar breakout above 97.80 was a layup. In fact, someone tweeted me and said even Charlie Brown knows the dollar is going to go to 97.70. And I don't know, maybe Lucy just picked up the football. Because although called the top here, I was only expecting this type of rally and failure. We did rally without taking out this high. So we have two lower highs if you go back to the high of the move, right? So you have, this, and this pretty negative looking candle on the daily, but the day has just begun. To me, it looks like if we start taking out today's lows, just like if the euro starts taking out today's highs, we can get some type of acceleration. Like I said, in euro, up towards this moving average here. It's going to take you to 113. We get through 113. I actually think there's a chance, something I talked about last week, for us to even challenge these highs. If that happens, then the Dixie is going to trade back down here initially, 96.70 or so, and then has the potential to challenge these lows one more time before the dollar bull market reasserts itself. So with a weaker dollar, hold on one second. My scheduled speaker today had an emergency at the hospital, so trying to get Adam here. Haven't talked to Adam in a while. Hope he's going to be available, so we'll see. Anyway, this is live TV. You have to adjust. I did want to point out something in the gold with dollar weakness. Now, I don't hear anyone talking about gold to the long side. Talked about it last week, and I understand why, but most people are in the correction camp. Most people are in the correction camp right now, and the way I see it is there is potential. You look at this is a descending triangle, which is a bearish formation. No one's thinking, okay. No one's thinking that we could rally to new highs here. Everyone's in the correction camp, and they're going to be right if we fail from 1280. So 1280 right here would be a failure, and we're rallying right up towards this moving average. So there's a couple stopping points, maybe 1308, and then the descending triangle line. We get through that, and the gold actually would have a chance to make new highs for the move. Everyone would call a breakout over 1355, 1360, and actually measures close to 400. So that's a possibility depending upon the magnitude of the decline in the dollar. We'll take it a day at a time. First the 96.70 level, and then again, if we take that out in the Dixie and the euro takes out that 112.60 level, the dollar pullback correction should continue. So just wanted to point out the gold because I don't know, I'm on Twitter, I'm pretty active, and I don't hear anyone talking about getting long gold off this double bottom here. So there is potential, because I think a lot of people are waiting for lower numbers to get long. I am personally, and longer term for a position trade, but this could catch a lot of people wrong-footed if we come out of here. So that's my view. I want to invite everyone to become a member and a subscriber of the best intelligence gathering medium on the street. You know, try a trial for $1. I'll send you a refund if you don't think you got $1 worth. But there are all kinds of patterns in play that can definitely help you pay for that subscription. Here I am logging in here, and Amanda is welcoming me, even though she's on daylight saving time is over. So, you know, you're going to get Greg's stuff, you're going to get Andre's stuff, you're going to get Blake's stuff and Steve's stuff here, and you're going to get Stelio's work. So encourage everyone to join, and also encourage everyone to contact the sponsor of FACE, Forest Park FX. Okay, we're going to have Adam Button here today at the top of the hour. You could see it. Adam's what a great pinch hitter Adam Button is to come in and help us out today. So as you can see, live TV, I'm multitasking. I'm not that great at it. In fact, Skype breaks up my my thinking patterns, especially on a Monday morning, Blake, where I really dragged my butt out of bed today, bro. Still, I have a few cobwebs.
I'm with you.
It still have cobwebs, buddy, and you know, I'm on my third cup of coffee, trying to wake up and act like I've been, you know, act sharp. But I want to thank everyone for listening to my sleepwalking intro to the FACE webinar today, and should probably be okay by the time Adam gets here later on. How are you today? How are you, buddy?
I'm tired. I actually slept to my alarm, which usually I don't do. Usually I can get up, you know, 15 minutes ahead of time, or you know, whatever. But yeah, it's slow. Our Mondays are usually, you know, rough. You know, for those of us on our time zone anyway. So that's good. You're gonna have Adam here.
Yes.
Oh, that's fantastic.
Yeah, and Adam, you know, it's still fairly early in the month. I'm going to ask him about April seasonals, because we get some good insights from him on what he looks for on a monthly basis. So looking forward to talking to him.
Well, let me see. Hold on really quick. Let me tweet this really quick from at Forex Live X Live. Jumping on the FACE webinar.
Thank you, buddy.
Today in about 50 minutes. Make sure you join in to to get an update.
Live TV, Blake, isn't it something?
Yeah.
Before they get to see how we make this work every day.
There we go. All right.
Man plans, God laughs, bro. Okay, so anyway, what do you think about the potential of a dollar correction here, Blake?
I'm hoping not. I'm okay. You know, if you on the week ahead video, I kind of built the case for a dollar continued rally. Now, I don't need to rehash everything with everybody, you know, based on, you know, what I said over the weekend. But you know, we have equity markets that are very strong, and we're obviously we're down just slightly today, but you know, I was drawing this. Excuse my drawings. This is from the webinar over the weekend, so I can delete these lines. But what I was talking about is the divergent relative strength, and how daily sentiment index, the DSI, is pretty extreme. So the risk of you know, near-term pullback is increasing in the equity markets, And so if we have a situation where, the stock market starts to pull back some from current levels, the risk of the dollar, continuing higher, I think is high. Excuse me. I'm sorry if I'm just yawned on you guys. You're probably yawning too, and it's very contagious. So I apologize that. Uh, we have this flag building here, and I think that the dollar, the risk of the dollar pushing higher is high, especially if the equity markets start to pull back. Now the euro is bouncing right now. I think a lot of the reasons why the euro dollar is bouncing at the moment, though, is the euro pound. Let's go over to the euro pound really quick. The euro pound is getting a lift from this could be. I've kind of been
a diamond.
Yeah, I've been kind of drawing it out, watching for this potential pattern. But I think that the euro pound being a little bid right now is elevating the euro. It's not because the euro is strong as a whole.
That 86.50 level, Blake, and was a breakdown, and look how long it's taken to accelerate to the downside. It keeps retesting it. It makes me skeptical about the breakdown at 86.5.
Yeah, the further we drag on here with the cable, the less bullish I am becoming. You know what I mean? Yeah. So I'm starting to get a little skeptical about the cable, just in general. The pound is. Let me go over to the pound. You can see we have this like bearish wedge. You can see it right here. This would be the upper end of the wedge. This is the lower end of the wedge, and we are building this bearish wedge, and we're not able to. We haven't been able to rally, and I'm like I said, I'm getting a little skeptical about the cable just in general, and I think the risk is that the pound could do one of these, back down to like the mid 20s, mid 120s. So if that's the case, I think the euro is getting a little bit of a lift just in from the euro pound currency. I don't think that the euro is going to get too far or move too much ahead of the ECB. We do have the ECB decision on Wednesday. So and that's how dovish is Mario Draghi going to be, especially with recent economic data out of Germany. And I was also mentioning about, Mario Draghi, and I have to go look at the timeline. Matter of fact, let me see if I can pull that information up really quick. Give me 1 second. Okay, hold on really quick. I'm searching something. So Mario Draghi, his term is up in October of this year, and it's looking increasingly likely that I think Weidmann, we might have an ECB German president. So we might have a German ECB president, and based on recent economic data out of Germany, we have the risk of having a little bit more dovish ECB moving forward, and I think that's that's probably not going to bode well for the euro dollar. And I know it's still a couple months away, but it's just something to think about as we move forward. And the euro's pushed up towards the 38%, or this would be the 24% retracement currently. We're pushed up against there. We might make our way up to 112.85, which is a 38% retracement. I think that's a potential risk, especially if we break out of here, right here like this. But I'm already starting to build a core short position in the euro dollar ahead of the ECB meeting this week. I'd like to be on the short side, and I'd like to have a short position. I think I already started, taking some pot shots at the euro, but I think if if you're lucky and you're patient, we might be able to get 112.85. Because if I had to fast forward between today and Wednesday, I think we might squeeze up here, today, tomorrow, and then roll back over ahead of Wednesday. So I think you might be able to get a better price, here in the next 24 hours. That's why I don't want to get too aggressive at this point. But I'm trying to establish a short position ahead of the ECB meeting. That's my intention today. So anyway, but it is a quiet market right now. There isn't a whole lot going on. The cable, this is stalling at the 38% retracement as well. You can see the bounce has been pretty limited. And as long as we stay below like 130.70, we should stay pressured. The Aussie's in the middle of this triangle, nothing to do here. But the Kiwi, on the other hand, you can see how the Kiwi dollar broke down, and I believe we're below the 200-day moving average. We are trading, we're trading right at the 200-day moving average right now. So a nice solid break below these lows. I should actually take this off, and let's do this. This is support for the Kiwi right now, and we break through those lows. So you can see them right through here. That's when the Kiwi is really going to probably come under some pressure. So, and the Kiwi dollar, the bounces have been very minor. I'm still long the Aussie New Zealand. For those of you that are trading the Aussie New Zealand, if you were in our ForexAnalytix, chat room with our community, I took off half of my position when we were at 105.70 on Friday, and I had a bid. Well, I still have a bid in the Aussie New Zealand at 105.30, and we went as low as 105.32. So obviously it missed my entry order, because what I'm trying to do is I'm trying to get long right here at this trend line. So, and I don't think, or I still think that it's possible that we can make our way down to 105.30 still. So I've left that order out there. I'm hoping that it'll dip a little bit so I can buy a little more. That's what I'm trying to do with the Aussie New Zealand. So if any of you guys are following along that trade, or if you were if you listen to Real Vision and you and you know that I'm long the Aussie New Zealand, if you watched the Real Vision segment last week, I've already taken half off, but I'm trying to add it back. I'm trying to reestablish a full-size position a little bit lower. That's my intent anyway. Let's take a look at the Canadian dollar. So the dollar Canadian, we had a nice little boost on Friday, and we stalled at the 618 retracement. I don't really know what to do with the Canadian at this point. I'm just kind of I'm not trading it at all at this moment. I think you got to still watch crude oil, but if crude, which, by the way, crude stalled at some pretty key resistance here. Let me show you. It was at 618 retracement. This is a major 618 retracement. So of the fall from the November highs to the December lows, we're right at the 618. We're right up against a big support or a resistance zone, and we're overbought on the daily chart. So I think crude could pull back a little bit here, which would be good because gas prices, if you guys haven't been following, I'm sure everybody here has noticed, energy prices have gone up markedly over the last couple of months. So that's going to start to have a negative impact on our economy globally, in my opinion, if we continue higher. So crude is stalling near the 618. If we get a little bit of a pullback, that could weaken the Canadian currency, and we could see the dollar Canadian continue to rally. I still think that the dollar Canadian's in a bullish formation here, inverted head and shoulder pattern. I still think we're going up towards the mid 130s. Now, if you're short, just know that we're in this longer term up channel. We still have a bullish formation that's got to complete. So I think the risk of the dollar Canadian moving higher is still pretty good, although I'm not long at this point. Excuse me 1 second. Hey, Dale, are you here?
Yes, sir.
Okay, I'm
I'm
gonna
here,
put,
Blake, as well.
hey, I'm gonna put you guys on mute for just a second. I gotta blow my nose. Excuse me.
It's allergies. Hi, Steve. How are you?
I'm good. How have you been, Dale?
Okay, buddy. You guys are all home, and
Yes.
I hear Jason has energy today.
Oh, yeah. He does. He does.
You and Katerina don't.
Yes, that's actually true. Especially Katerina.
Yeah.
The problem with kids, they don't, you know, they don't you can't slow them down, especially at those ages. And they go and go and go. They're like little.
He doesn't even know he was, in the hospital for a few days. He's doing cartwheels, and now Steve and Kat need to go to the hospital.
Probably something like that.
All right. Well,
Parenthood. All right.
Well, thanks for being here, Steve. I'll ping you in here in just a minute. I'll wrap up with some of these majors here. So, I've been watching the dollar Mexican peso, and I've been watching it kind of carefully. I've been waiting for the 618. You can see I have this alert, this alarm that's sitting here, just ahead of the 618. And I wanted to be notified when we dip down there. I think we're gonna, possibly get down there today. So see how the U.S. dollar Mexican peso reacts around the 19 level. I think this is going to be pretty critical support for the bulls. And if we get some sort of reaction from there, like we get a dip down below 19, maybe trip some stops below 19, I might actually get long a little dollar mex. That's something that I'm considering, and I've been waiting for this level down here as well. So we'll see what happens. Here's the dollar Swiss doing absolutely nothing. There's zero to do with the dollar Swiss at this point. I know it's tempting to trade, but right now there's zero going on. Let's take a look at the U.S. dollar Norwegian krona. We're also, I would say we're between the 860 and the 840. This is like just a trading range, and unfortunately we're smack dab in the middle of the trading range at the moment. But I think this is your sandbox, so play in it, meaning that we get to the lower end of the range, you probably want to be a buyer. You get to the upper end of the range, you want to be a seller. You just there's nothing to do while you're in the middle of the range. And this is why I've turned a lot of my attention to some exotic currencies because of this. Speaking of exotics, now I don't want to take too much away from Steve, as I'm going to bring him on in just a second. Matter of fact, I'll let him go through the yen pairs, so he has some things to talk about. But I want to take you over to the Euro New Zealand. I am obviously bearish the New Zealand dollar because naturally I have an Aussie New Zealand long, so I'm naturally bearish the Kiwi. If you are bullish the euro, like I'm in the camp that the euro dollar is going to 110 soon. Maybe even might start its way there this week. But I'm in the camp that the euro dollar is actually going lower and the dollar index is going higher. How high, I'm not really too sure yet. I think it depends on more developments that we have in the future. But I still think that one currency that's going to benefit is going to be this Euro New Zealand. And this Euro New Zealand, even if the euro goes to 110, that doesn't mean that the Euro New Zealand will go down, because if the Kiwi dollar, trades down towards 66 cents or 65.50 or something like that, and the euro dollar makes it to, just to 110, let's say, makes it down here towards 110 or even 111, then the Euro New Zealand still can manage to go higher. Because on a percentage basis, if the euro is moving down less than the Kiwi percentage-wise, the Euro New Zealand can still go up. And we've got this inverted head and shoulder pattern. We've taken out this nice little downtrend line. You can draw it any which way you want. You can go like that. You can go like that. But regardless, the Euro New Zealand looks like it's bullish here. And the Euro New Zealand is a currency that could, in my opinion, can still go a lot higher. that takes us up above 169, and we're currently at 166 and change. So the only reason why I'm not long the Euro New Zealand currently is because the only reason I'm not long the Euro New Zealand currently is because I'm long so much Aussie New Zealand, and that's where my focus is. But if I wasn't long the Aussie New Zealand, I would be long the Euro New Zealand. This would be my second choice. This is something that I think is a great opportunity. Again, if you want to stay away from some of the majors because we're just not seeing a lot of movement, you might want to focus some of your attention on some of these cross rates. So anyway, just a few things that I wanted to bring to your attention. I know I wanted to leave some stuff for Steve. We're gonna have Adam Button from Forex Live. It's great that he's gonna step in. He's stepping up to the plate, and he's gonna come here on very short notice. He's such a great wealth of knowledge. Adam Button with Forex Live. If you guys are listening in and you typically don't stick around for the interviews, you got to stick around for the day because Adam's great.
You guys need to stick around for every interview.
I wish I could.
As part of your intelligence gathering. But yeah, it's baseball season, right, Blake? I bet your kids are playing again. And anyway, what a great designated hitter Adam Button's going to be. So
no, it's awesome. It's awesome that he's stepping in here. I have to go back and listen to the interviews on a recorded basis because I start chatting with my office in Greenwich, Connecticut after this webinar. After I'm done here, that's where I'm usually chit-chatting with those guys in the office. But if I didn't have to do that, I'd be listening to your interviews every single day live. I have to go back and listen to them on a recorded basis.
We actually have a face that's a very strong bench. So, I have scheduled pretty much 2 months in advance, but, things happen, things come up for people. And there's a handful of people that I could go to fill in that I know are always going to provide some compelling ideas. So I feel grateful to have these guys willing to do that.
Awesome. It's great stuff. So Steve, what are you looking at? What are you looking at this week with the ECB meeting on Wednesday? You got anything brewing? Any thoughts that you have? Gold's got a nice bid. Silver's trying to catch up to gold a little bit, which has been underperforming quite a bit. What's your thoughts going into this week?
Having to do with anything that will be affected by the ECB, I think, first of all, we know the correlation between euro and gold, so that's one point there. And I, for some reason, despite seeing the DXY, which is indeed looking very good in that wedge, wanting to break to the upside, I still see the USD Swiss, and I still see a corrective bounce, and this troubles me a little bit from a technical perspective. Because I would want to see another move lower in the USD Swiss, which would, in essence, could only happen if we had some kind of a euro rebound. I don't know. I also see the euro Swiss rebounding from a descending wedge. I think you talked about that trade last week. We were at a support zone. We had a nice wedge, and we are rebounding. Of course, moves in the euro Swiss are rather slow in comparison to the usual pairs.
Senior, it's I saw it on ARP, which is for senior citizens, that anyone over 65 could trade euro Swiss.
Oh,
most likely, yeah. Or you need to use like
10 times, huh?
Or you need to use 10 times your regular leverage.
Anyway, all right.
And hope that the S&P is not going to do something crazy again. Blake, you didn't tell me though. What do you think about Trump's statement about the Fed needing to cut on rates?
Well, I mean,
what a surprise!
I mean, yeah, I mean, he wants what's best for the stock market. So, I mean, he's just, and he's putting in Herman Cain into the Fed, which many would argue that is not a qualified candidate. But
what do you mean, Blake? 999.
You're trying to get
Back the Fed.
And I don't necessarily agree with what he's doing. So, but I think Powell is trying to prove himself to make sure that everyone knows that he is independent of the administration. So
if that's what he's trying to do, he has failed miserably already.
Yeah, but just because he's he's going neutral, I think is more of a result of the data. It's not. I don't think it just happens to be that he's like, okay, I am not, or I'm going to be a little bit more dovish, not because it's more of a global slowdown. It's not just a U.S. slowdown. So, but we'll see. We'll see.
The economic data have not been good. That's the only thing.
I think Powell is S&P dependent, because that was the worst December since 1931, Blake, and that would change any Fed chairman's mind, except Paul Volcker.
Right. Well, hey, Steve, I'm going to pass you over the charts, and you guys have a great session and have a great interview with Adam.
Thank you, buddy.
And guys, make sure you stick around, because he's really great. So, all right, thanks, guys.
Good hunting.
See you later, mate. Bye-bye.
Bye.
Great to have you back, Steve.
Great to be here. So, Coach, we don't have Stelios with us today. He's at a funeral, actually.
Yeah. Okay.
Yeah, that's part of life. Anything you want us to have a look at before we go on? Anything on your mind?
You just naturally cover the whole jigsaw puzzle, so I'm interested in what's on your radar today. Also interested in, because of your bearish view on gold, and you're, I believe, still in the correction camp, what's important for all of us, no matter what our view and position is what's going to change it. So I'm curious, what would change your view on gold here, Steve? Would we have to take out 1320?
Move above 1321. Yes, exactly. In that case, I think we would be looking at this.
Yeah, it's a descending triangle type look. Yeah.
Like a flat bottom triangle, right?
Yeah.
So in this case, I was looking for a move here. Thankfully, I took some profits on Friday, because I didn't like, after this hammer, I didn't like the fact that we started, being under pressure on Friday once again, and once again, we recovered all the losses. Yeah. So I took 1/3 more of my profits. I had already taken 1/4 quite early, because I wanted to make my stop loss, free of risk. So I took another 1/3 off. So as you understand now, I have a little bit more than 1/3 of my position, and I don't have any reason to worry about it. I'm going to let it loose now. If we get that push towards the next objective at 1265, because we in essence made it to my first objective. My first objective was the previous low here. As you see, we more or less tagged that previous low, and we're now rebounding. Now, this 1300 area that we're now testing is also a psychological level, but a previous horizontal support resistance zone. So I want to see what's going to happen from there. If we break above this descending trend line that I just drew, I think that then we can be talking about likely a corrective move lower and a push higher. Likely, if I zoom out, you can see it here.
Yeah, back to the highs.
Back to this blue trend line resistance from this large triangle, which comes at the moment at 1360. So if we do break above there, the chances for another push higher towards 1360 obviously increases. Same situation here. Actually, silver
weaker
from a technical perspective. Silver also had, I mentioned that, I don't remember if it was Friday or Thursday, that 1480 area, 1480, 1485, 1490, this little area here for silver is quite important, because don't forget that that was the ceiling, in essence, of this rectangle that we were trading within from August 2018 until the end of 2018. So we traded in this rectangle for 5 months. Once we broke above it, we came back. Now we retested it a couple of times, and it's holding. So how it is. The market has memory, and that level is quite an important level. So I'm not really surprised that we held that level, because that was a key level for the bears to break through, and for the bulls to defend, and the bulls have defended it so far.
Yeah.
So unless we break below this 1480, 1490 area, silver also can prove to be bullish. So let's see what's going to happen. I'm not turning bullish yet. Not in any chance.
Okay, how about copper? I know you were constructive a few weeks ago before the sell-off. We had a very negative week last week,
as you see,
but now it's holding.
You see, copper is still can still be, the price action here can still be read, from a bullish perspective, right? I mean, you can see this as a bull flag. We broke above, we come down, we retest it, and let's see what happens from here. I don't like the fact that momentum has stalled, very, very much. I mean, it's very obvious that once we got to this 3 area, we lost momentum, we pulled back, we retested that area several times. We haven't managed to break through it. But on the other hand, equivalently, like we said in silver, we had this, we had for copper this rectangle. We broke above it. We broke down below it, in the short term. But I think that we should still maintain our bullish bias, unless we see a clear breakthrough this 285 area once again.
Okay, Steve, I just want to interrupt you just for a second, because it's great mentoring. You're talking about market memory and how these markets have come back to retest what was important a few months ago. But I was taught by a very good trader, and it's a very simple thing. Look left when you're trading. Look to your left.
Oh, absolutely.
Yeah, it's really an important thing to do, is don't always look right to project where you think things are going to go, but look left, because you're right, the market has a memory, a longer memory than we have. How about that?
Yeah, that's why I keep support resistance zones, because you see that, I mean, from my experience, if I had to get rid of either fibs or support resistance areas, I would actually get rid of fibs. I mean, both of them are extremely useful. That's why I use them, right?
Yeah.
I'm not advocating that somebody should not be using fibs. Quite the opposite. But what I'm saying is that from my experience, if I had to judge what's the most important indication that a level might act again as support or resistance, is if it has had importance in the past, especially if it's the rather recent past. Because, a level might be important for a period of time, and then if the market starts breaching through it, a couple of times, then it stops being important, right? So, for example,
or it gives you just another message. It's still important. It's saying that what was left doesn't matter anymore.
Exactly. So you need to readjust. For example, I sometimes jump the gun and put support resistance areas in what might prove to be support resistance afterwards. So, for example, here in palladium, I decided, since we had a little congestion area here, I decided to make a horizontal resistance area, ignoring the wicks. But seeing that this rebound now actually stalled at the previous highs, including the wicks, I'm going to move this area there, because it proved that this 1430 area was more important than the 1400 area, despite being a round number as well. So if you keep adjusting, you can see that the market very, very often plays very nicely with these levels, and these levels can be used then as targets or as entry levels. For example, my decision to enter at 1321, my second position in gold, was based on the fact that I had a horizontal support resistance area there, and it was also the 61.8, because don't forget what we teach here is that using confluences gives you better signals, right? So especially when you have more than one indicators that a level might, might play out, it's even better. So speaking of Palladium now, Palladium actually played out very nicely. I actually, that was my third, great trade of the year so far. And I still think that as long as we remain above this 1430 area, the path of least resistance remains to the downside, probably towards this 1270 horizontal support resistance area. So I do think that Palladium still looks rather weak. On the other hand, Platinum has actually started showing that, its past weakness, which you can see it here. I mean, Platinum has been severely battered down as a metal following that rebound that we had to 2011. We've had a lot of weakness, but now we see that something is changing here, because first of all, we found like solid support at 780. And after testing this area, multiple times, we now broke above what you can even call rectangle resistance, because there are two ways to look at this. One of them is that this was an ascending channel. The other one was a rectangle between like 870 and 780. That would imply that, there is a range of roughly $90, which not accidentally would point the projection of this broken rectangle, as you see, if I do it very simplistically like this, would point higher towards the 78.6. If you want to be a little bit safer, I would say towards this horizontal support resistance area. So I do think that Platinum looks quite good to the upside. It looks actually quite healthy now. I wouldn't be buying it right here. Obviously, it's quite overbought. But as I said the other day, some ratios, between metals now show some big reversals in favor of Platinum, and I think that's also something to pay attention to. Now, having to do with crude. As I said, I had two entry levels, 63.50 and 64 to sell. One third and one third of a position. I didn't get triggered actually on Friday. Almost did, but I didn't. I'm paying very, very close attention to this resistance area, because its confluence of resistances is this horizontal resistance area. It's the 61.8 of this move, of this last bearish move lower. It's also, if you have a look at it on the weekly chart, there is also an interesting internal trend line that passes, from these two lows and now crosses from this exact area as well. So I would be very, very careful here with crude. Crude has rebounded, quite nicely, but I do think that we are bound for some type of a corrective move lower, which, knowing how they correlate, might come with some type of a correction from stocks. The S&P, for example, there we go. The S&P, for example, I'm monitoring this. After having that ascending wedge, we now have another ascending wedge. So I'm monitoring to see how this is going to play out. We still have RSI divergence here. I really don't know what can get stocks moving higher from here. Of course, with stocks, there is always the invisible bid. So, that's not something to advocate for a move lower. Nasdaq is almost at previous all-time highs. The IWM is breaking out from. We talked about this a few days ago, that the IWM actually has a formation that looks like it wants to break higher. It's doing so now. So not all indices are looking like they're peaking. Now the DAX, on the other hand, I wanted to mention that because there are two things here to pay attention to the DAX. First of all, that we broke above 11,800 finally, which is definitely a bullish sign, because 11,800 has proven to be extremely important support resistance area. It was the neckline of this head and shoulders formation, which its target was never filled. Of course, if you did play this head and shoulders formation, you definitely made money, because we made it like at least 3/4 on the way to the target. So if you're prudent enough to be taking profits on the way, you still, you still made a profit there. But having to do with the DAX, I'm also monitoring this ascending channel, since it has contained the rebound so far, and we're currently testing resistance. So I would, if you want to be bullish something, I would find it more appealing, perhaps trying to buy the DAX at a retest of 11,800. It is very, very likely that the ECB on Friday is going to, of course, affect what's going to happen here with this market. So, I don't want to jump the gun, but these are the levels I'm monitoring. FTSE as well, nice rebound within a channel, quite more constructive than the one we've seen at DAX. It has already retraced a lot more. Anyhow, I think that FTSE looks quite healthy. Be careful though, because every time we've approached this ascending channel, we've had some type of a pullback, and now we've already had quite a lot of consecutive up days. I think that if you want to be a buyer of FTSE, probably you want to wait for a pullback towards the bottom of the zone before trying the upside once again. Nikkei, initially I was monitoring at this ascending channel, thinking that if we break below it, we should see more weakness. But then we had this triangle forming here, which advocates that you should see one more high. We did actually get one more high, and we're now testing this confluence of the 200 daily moving average and this horizontal resistance area. So be a little bit careful here at 22,000, quite an important resistance, and I'm not so enthusiastic about the USD yen as long as it stays where it currently is. And this gives me no reason to be very enthusiastic about the Nikkei as well. Here you can see the USD yen. First of all, if you're looking at the longer term picture, there is not much you can be doing with this at the moment, because we remain in a rather large symmetrical triangle. Resistance of this triangle is not far away, roughly at 112.80. So I would definitely not be jumping the gun ahead of that level, because I would not want to see if the market is going to reject us for once again from that area. But if you want to look at it at the shorter term, I was monitoring this ascending channel. We broke below it, we rebounded. We now seem to be getting rejected temporarily from the extension of this channel's support. In this case, acting as resistance. So I wouldn't be very enthusiastic about the USD yen up here. I want to see what's going to happen with this price action and these technical formations that I just mentioned, and I'm monitoring. Hi Steve, pound Kiwi. When mentioning a triangle, are you referring to an Elliott wave triangle? Indirectly, yes. I use basic technical analysis and Elliott waves in my analysis. I'm not so granular about Elliott waves as Grega is, for example. I'm not going to different time frames and counting waves. But when I do see a move that's clear from an Elliott wave perspective, I'm going to count the waves and see if it's aligning. It's what it implies, if it's aligning with what basic technical analysis is telling me. So yes, I tend to be influenced by that when I'm looking at triangles, because in Elliott waves, triangles in most cases are fourth wave corrections. So usually you expect one more push higher or lower before seeing some kind of a reversal. So I'm going to take that into account. The good thing is that, as I said, I don't have to be very granular with Elliott waves. Grega is much better in Elliott waves than I am. So if I want to double check something, I'm going to just ask for his opinion and check on ForexAnalytix what his view is on Elliott waves if I'm uncertain about a count or whatever. So I can be a little bit lazy with that and spend more time doing my types of analysis. I call you since you have a style. Thank you so much for shedding light to our narrow vision. My pleasure. And every vision is narrow until you start, having more experience, and then your vision widens. So it's not something magic. It's you put the time on it, and you put the effort, and trust me, you can improve very, very much.
Yeah, you're
I
welcome,
believe.
Hammett. I'm always very glad to add my stigmatism to everyone's vision. I have astigmatism. Okay, buddy.
Just needed to plug in my headphones because battery was going off, as it seems. Okay, so we have more questions. We had the questions about pound kiwi, euro USD after the move, please. Okay, let's have a look at those. Yes, I'm going to go over the crosses as well, since we had a question about pound kiwi. What do you think of CAD yen, USD NOK? Okay, let me say that. Blake mentioned both the CAD and the NOK, but let me briefly say the following. Given the fact that USD NOK has broken above a huge formation here, and the fact that I believe that crude should find a resistance sooner rather than later, I have to say that as long as we remain above 840, I wouldn't want to be short the USD NOK. So that's my point of view in the USD NOK. I agree 100% with Blake's view on USD CAD. I mean, USD CAD looks like the path of least resistance is higher if you want to do something, but currently it's in the middle of nowhere, so I wouldn't be doing something. Now, having to do with CAD yen, since you asked. So, we need to zoom out so we can distinguish what is the longer term and the shorter term view. So, first of all, let's draw on here with a highlighter. Lemon. We had this formation, which was clearly a corrective formation. Okay, we broke down in an impulsive fashion. We then had another correction, an ABC, a zigzag, and then we had another impulsive move to the downside. Okay, so far so good. I mean, very clear correction, impulse, and we're likely in a corrective move here as well. But there is likely one more move missing to the upside. And if we zoom in, you can see that, this move lower is definitely corrective in nature so far. Okay, so if I had, combining what we said before, basic technical analysis and daily waves, if I had to guess what's the most likely scenario here, it would probably be another push to the upside, and then like a bigger rejection and then a move lower. So that's what I think about CAD yen. Now, do I have enough of a conviction to do something about it? No, I don't. But if you do like it to the upside, I can tell you with certainty that you have a nice risk reward here and you might want to be involved with it. Okay, because we had this channel, we broke above it. And, if you want to look at it in the shorter term as well, we've spent the last 5 days consolidating in a very, very small range. Given the fact that we came in that short range from below, I think that the next move is likely in the very short term to the upside as well. So the first area of resistance, if that happened, would be anywhere between these two areas that you see here. Why? Because between these two areas we have a fib level, another fib level, from a bigger move, and the 200 daily moving average. So I would be a little bit careful between 84.50 and 84.75. I wouldn't want to see I wouldn't want to see price action getting rejected from there, because that would be quite a dangerous area to get rejected from. But if we make it above there, I think that we might make it up here, in which case we might even retest these broken channels support as resistance. So that's what I think about the CAD yen. CAD Swiss. Oh my God, I don't even know when's the last time I had a look at it. As you see, quite a long time ago, and it even had a false break lower, which I bet got a lot of people trapped. Imagine how many people got trapped short from that spike there, right? Now, other than that, it remains range bound, more or less, as you see. I wouldn't be doing anything with it, quite honestly. we came in this large formation from the upside. So in any case, from experience and simple stats, I would say an eventual continuation lower is favored instead of a break higher. Okay. But, that's not something that's enough for me to even consider trading because, okay, that's a general direction which you have higher chances of seeing a move unfold towards. But, that's, too little information for me to, to use. Euro yen. Yeah, we can have a look at the euro yen, which hasn't been doing that much, but it has something in common with what we saw in CAD yen. It has also displayed a move lower that is channeled, hence corrected. But for me to turn higher here, I would definitely want to see this blue intermittent trend line break to the upside. Otherwise, if we get rejected from there, we might be in a more complex pattern. Okay, so I would be quite careful with this 126 area. I want to see a move above 126 for me to turn more bullish, in which case I wouldn't be very bullish. I would just be looking for an extension towards 129 for me to be clear. Okay, so that's what I think about euro yen. Now, all these bodes quite well with what I see here in the USD Swiss. Let me explain what I mean. Euro yen. I see likely scenario for one more leg higher. USD Swiss. It looks to me very nicely positioned for one more move lower, at least towards this longer term ascending trend line support. So, if we get an ECB that one way or another produces some kind of a bullish momentum for the euro, we will have that move taking place for the USD Swiss to the downside. We will also have that second leg higher for the euro yen. We will also get, now it's good opportunity for me to transition, a continuation higher for euro kiwi. Euro kiwi has broken above this descending channel, and this can also help it extend once again towards 171 likely. At 170, be a little bit careful, the 78.6% fib and the 200 daily moving average. So that's also like a viable target to the upside. So a lot of pairs are positioned quite nicely for Euro USD strength, for Euro strength. Even Euro USD, if you want to be bullish, you can interpret this whole thing as a descending wedge, in which case, if we do get a break above this, we might see some nice extension. The market is not expecting this, especially given the fact that the DXY is looking like it wants to eventually break to the upside. I'm the one that has been saying that as well. So, it's not that just the rest of the market is thinking that, oh, this is a larger wedge and can break. If we see a break above 97.70, then we will see an extension probably towards 100. But you know something, we're not there yet. So there is no guarantee that there's going to be a break above 97.70.
And everyone's calling it a layup, Steve.
Yeah, exactly. And perhaps everybody is waiting for this break above 97.70, and we never get that, right? Perhaps what we get oppositely is something like this. And to be quite honest, I know very few people that are expecting dollar weakness at the moment, including myself. I'm very skeptical about that. I'm a long-term dollar bear, but in the short term, I have absolutely no reason to be bearish the dollar. And yet, I'm just having all that spin in my mind. I'm thinking, okay, the market is so much content with seeing more dollar strength. Imagine what's going to happen if we actually see the opposite. Everybody's expecting that the outcome from the ECB is going to be more euro weakness. There's going to be more dovishness, but we've already priced in a lot of dovishness. Okay, and in all honesty, if Weidman, I know I disagree with that with Blake, but that's absolutely fine, because if we have agreed on something on ForexAnalytix, is that we're not going to influence each other with our opinions. I mean, otherwise we wouldn't be useful for our community as well, because When we agree, that's great, because it means that the chances of something happening are very high. When we disagree, that's also fine. You know what I mean? So personally, I believe
I
that the
agree.
Germans,
It's okay to disagree.
yeah, the Germans remain extremely hawkish in comparison to the rest of the world. So if we indeed get a German central banker, I think that the market is going to interpret that as a quite a hawkish message, from the European Central Bank. Okay. Let me go. Last but not least, I know that I'm now running late, but we had a question about pound kiwi, so at least let me cover this. And I have to say this for pound kiwi. This formation is very clear, clearly defined. There you can see it. There you go. As you see, you can look at it as a wedge. Okay, it is a wedge actually. So is it a bullish or a bearish wedge? I have no clue, but I can tell you one thing for sure. If you see a break above this confluence of the wedges resistance in the 61.8 at 195.75, I think that's going to be a very bullish development, and we should see continuation higher, perhaps retesting the highs. Oppositely, if we see a break below 190.50, let's say, I think that's going to be enough to get us back down to retest this larger channel support. So I don't know if you're bullish or bearish, but I can tell you one thing for sure: is monitor those levels and don't try to fight the market if we get breakout from those, because I think we will see an extension one way or the other. My pleasure.
Thank
okay,
you, Steve.
Coach. Enjoy the interview.
All right. Well, you clarified quite a few things for me and also gave me more confidence in what I was doing. So always appreciate it, Steve. Adam, my trading warrior brother, I'm making you the presenter now. No one could ever ask for a better pinch hitter on any team than Adam Button. Hello, Adam. Welcome back, my trading warrior brother.
Hello. Got
Buddy.
me here?
Yeah, got you. Got your screen. Adam, missed you. How about that? It's really, I appreciate you being back here, Adam. And I know that even though it's April 8th, it's still early in April. And when we get together, you have some seasonals that you pay attention to every month. So where do you want to begin? What's on your radar here for the month of April?
Yeah, okay. Well, that's a good one. Nice to be back here. It'd be nice if we got some seasonal weather up here.
So
but
cold
anyway,
up there. So
still
cold.
cold. Still, it's been a long winter here. It feels like it'll never end. I mean, April, it's seasonally, it's one of those months that really deliver. I mean, you see, at least traditionally, these strong patterns in seasonals in April, whereas some months, there's some weakness or there's some ambiguity, whereas in April, you have these very strong trends. And one of them, I just heard Stelios talking about it, an odd thing that seems to be shaping up is dollar weakness. April is a terribly weak month for the U.S. dollar against the euro and sterling and the commodity currencies, really. So, if you look at sterling, I think it's about 13 of the last 15 years it's gained in April. I mean, and for people who haven't heard me talk about seasonals before, that the obvious caveat is it's just one part of the equation. I mean, what happens with Brexit is going to be the driver of sterling, but that is the seasonal backdrop there.
But its value, Adam, is that it gives you something to look for that gives you a bias that you wait for some price confirmation to see if the seasonals begin to kick into gear. Am I correct in reading you that way with how you utilize that?
That's exactly how I use it. How I encourage people to use it is to think, if this lines up with some technical support, if you see maybe something in the fundamental background, or maybe there's nothing in the fundamental background at all, and it just will drift in that direction quite often. So yeah, the euro, it's a very good month for I don't have the exact, I can pull up some of the charts there if you want to see.
So possibly Draghi is not going to sound as dovish as perhaps the market has expectations for this week. And, we've had sentiment readings in the dollar in the 70s for a long time. And actually last week, Adam, we followed DSI. I'm sure you're familiar with it. Euro had like a 16 reading of bullishness. And, you know, that's almost as bearish as the market could be. You could get the single digits, but it's very, it's very unusual. So you have most people friendly the dollar, bearish euro, cable, etc.
And when the CFTC numbers came out on Friday late, and the euro position I think was short net 100,000, which I think is worse since 2016 or 17. So the market is really bared up here on the euro, and that's the seasonal. That's why I can sort of look at the heat chart there, and you can see kind of the 10-year average shows it's the best month for the euro. Now, but you can see within that, you know, there's not that much consistency in the euro. Kind of, what is that, 5 of the last 6 years, though, it's been higher, and 8 of the last, 7 of the last, 6 of the last 8.
Do you post this stuff on Forex Live, Adam? Do you post this stuff like this? That's a great heat map of your seasonals. You share that with your community, correct?
Yeah, we have that kind of start of every month. I'll pick through them and try to match up with a few of the other things that have been going on. I mean, one of the all-time great ones, it never really gets its due because people don't like to look at it as much as oil. I mean, oil, April is the best month seasonally for oil. And if you go back kind of February, March, April, you can just see that top line of the chart I'm showing. There's this consistent pattern in Q1 into April of strength in oil. And it's been the best trade of the year, right? It has been 45%.
Besides S&P, besides stock index.
Right.
Maybe they've outperformed a little, but yeah. Yeah,
it's been remarkable, and it's that weakness at the end of the year in oil, and that once again, came through spectacularly for crude. So that's a good one. And as you can imagine, you see oil higher. It's higher Canadian dollar as well this month, higher Australian dollar. Dollar yen is a little bit more mixed, so that's not this one I might be looking for dollar strength. Natural gas is another one that runs for a couple months starting now. I don't know if too many of your traders are looking at that. It's extremely volatile trade in natural gas, but it's pretty beaten down. It's kind of near support.
They call it a widow. They call it a widow maker. That means
it's crazy.
Yeah, that means that if you trade it, you might, your wife might be left alone.
I mean, I had like in the seasonal. Sorry, I don't know if it's gonna be easy to speak, but I believe so. You look at natural gas. There's the chart, and I don't have the up-to-date one, but that's just a seasonal story. You see from you went from $2-3 up to $5 in October, November last year. I mean, in a heartbeat. So you're talking, 80% moves in pretty short order there, and then right back down from 5 to 2.5. But you're kind of near this 250 level, which has been
and you're putting in a higher low here, higher low as well.
Yeah, right. It kind of ticked off that. The one thing is, it's really natural gas is a world of its own. It's all in these delivery points, right? So certain parts of the United States and parts of the world, natural gas it's almost at zero. It even traded negative last week because you get these massive gluts and you can't get it through the pipeline. So they say natural gas is a colorless, odorless, tasteless, and worthless natural resource. So it is a tricky one to trade. I wouldn't advise getting too into the fundamentals unless you've got a lot of time. But technically, it does seem to have that area of support there.
What are the biases for the precious metals during April? You have a lot of people still looking for lower numbers in gold, maybe around 1250, but this 1280 is held like a rock, and we're having a pretty good update today, Adam. Any clues there in April?
You look at April, I mean, the trade in gold for me, and I talked about it, I think almost the last time we were on was maybe December, January. The start of the year is the time to buy gold, and it came through spectacularly again this year. I think it ran up 8 or 10% from December. It was a nice place to camp out during the volatility, and it's kind of creeping a little earlier. So, I mean, my trade every year is to buy gold in December, sell it at the end of February. And I think I've talked about it 4 or 5 years in a row now, and it's come up again, and now you're in this more choppy time. So it's been interesting in that it's volatile. And if we have the chart here, I'll pull it up somehow, and it's just not that compelling for me right now. I mean, we're a little bit worried about the downside, right? Because you tested off this and it looks a little bit like a head and shoulders top. But seasonally, I don't see it. I mean, if you are looking for dollar weakness, it can be there. I mean, you do have a little bit higher lows coming up here. It's a very interesting technical chart. I don't think
go ahead, buddy. I'm sorry.
No, I want to buy gold when it breaks 1400, and that might be a ways off. So 1380, 14.
Yeah, it just seems like most people are looking for lower gold numbers because they missed this recent rally and they want to get long right around 1250, 1240. I'm not even talking about the super bears, but also there are not many people talking about the long side. I think the biggest surprise in gold would be it goes from here and cleans out all the stops over 1360. Maybe then it turns bad because everyone's going to call that such a major breakout. If we take that 1360 out, it measures 1500. So I think that's unexpected from here is for gold to rally towards 1400, and that may be a surprise.
I have been surprised. I mean, we maintain a chat room, and there has been so much talk about gold in that lately, and it kind of retail's back interested in gold. We have central banks, right? If you heard the Fed was going to cut, I mean, the market's pricing in a cut, but if we get that signal, I mean, the sky is the limit. I don't see. If you can get up about 1400, 1500, is to scan out a little bit. I don't see why you get up about 1400 or 1380. I don't see why you can't go back to 1900.
Okay. All right.
That's up to me. So for me, I'm not in a big rush to buy it at 1200 or 1260 or 1280. I think wait for 1400 to go and then get on board and hang on for dear life. But that's kind of the way I'm looking at it.
All right, speaking about holding on for dear life, with crypto traders really have popularized that, and recently they've had a little reprieve. I liked the way Bitcoin held a few months ago, putting in a higher low, and we've had a breakout. Any view, and is Forex Live now giving some more coverage to cryptos now that the EKG is in a flat line and we're starting to get some action?
Well, we never stopped covering it. We never stopped. So hold on, let me see if I'll use our charts and pull it up if I can get it going here. I think I'm just a little bit. What makes me uneasy is just the speed of the move, right?
Okay.
And it certainly makes it for an interesting move. I am more inclined to fade it, but
okay.
That's kind of where I'm.
18,000 to 3,000, rally back to 6, where it really had a major breakdown, would not be unusual and is not the hallmark of a bull market yet. It's just could be a bear market rally, like you're sensing, correct?
Isn't that the old rule of thumb with something where it goes that fast? It's not the best signal to see something. In a good bull market, you want to see it ticking higher every day, not something where you have it's inarguably a bear market over the last year, and then you get this snapback 25% rally in 2 days. That's actually kind of a bearish signal, the way I see it. But Bitcoin's a little bit of a different market. Can you generate this retail enthusiasm again, or this enthusiasm from the layman, or have a lot of these people been burned out and won't come back? And that's not such an easy question to answer, because what brought so many people into Bitcoin to begin with was the price action, right? So a lot of it sure might have been the technology, but
everyone loves a parabolic move, and usually near the end of it, right?
People find it easy to believe in something that's going up every day. It's going to change the world. So,
that's an interesting pearl. Okay, that's an interesting pearl. That, and although we did have probably about 6-month basing period in Bitcoin before this recent rally. And to you, it could be most likely some type of short covering panic. And I'm trying to understand how that could happen, since I believe they've taken Bitcoin futures off the board. And when they put it on the board, that was the hallmark of the top where people could short. Could people still get short Bitcoin? And could that have been one of the major catalysts for the April Fool's explosion, Adam? Do you know that?
I mean, the one thing for me, it doesn't, I mean, you can get short CFDs, you can get short futures. I mean, futures, I just didn't think the volume is there to do it at the CME. So to unwind it for the, so that would be hedged. But I don't see how the CFD volume would be hedged by the brokers enough to cause that kind of squeeze. So it to me doesn't, I've read all the explanations, and you go out there looking for them, and it does look like a squeeze in the sense that you see the volume coming in these massive bids, but from the structure of the market, it's not the same kind of two-way market. Like, there's not the borrowing, but it obviously could be, but it's just not structured in that same way where you could see a squeeze in a stock, for instance, that's got 20% of the float outstanding. Bitcoin isn't like that.
Great segue. Great segue to stocks, Adam. So we haven't talked for a while, and we had that the worst December in equities since 1931, and I felt we could have a bear market rally. I was looking at fib 61.8, 78.6 of that decline, and I have to say that the magnitude of this recovery was much more than I was looking for and my account was looking for. So what do you have for April in stocks? I know a lot of people think there could be some type of high in April. And did you expect this type of recovery off, just one low, no retest, kind of a V bottom, and outstanding, surprising to most recovery in the S&Ps, almost within a couple percent of all-time highs?
You never kind of, I mean, I was there, I was positioned for it, I was buying at the bottom, but I think that's kind of, I wish I had the old clip. I don't know what I was saying last time I was on. I'm going to pull it back up maybe, and we'll talk about it. But it's a reminder to people that, I was watching TV every day. I mean, I was trading on Christmas Eve and working at Forex Live and writing about it. And like, the amount of bearishness was just out of control. Every guy you saw come on TV was saying, oh, we're in cash or we're defensive now. Yeah. And as a retail trader, someone who's watching it, it's tough to get away from it. It's tough to shake, especially when the market's falling 5% a day. But that is kind of the experience of it all, is that, well, okay, these guys they're over the top here now. Everybody's bearish. They can't be bearish. And the data for me was never that bad. So I obviously I was miffed and puzzled at the power and the strength, and we're all worried about the Fed, and that was kind of the story in December. And the Bank of Canada was just as bad, and some others were the biggest, even the ECB. So I mean, I was constructive and if not outright levered bullish. I'm surprised though at how kind of steady it came back in early January. It was day after day, and then really through February now, even to now, I think we're up 6 days in a row through Friday.
And this is your weekly. We haven't had one weekly down. We haven't had one down week since the week after the low. That almost looks like it did going into 2018. You have all those green weeks into the high. So okay. Great call.
I guess people out there looking for what's happening now. I think this is it. I mean, April's a great month seasonally. You can see it's been a spectacular start already. Earnings season is coming up. You see every day analysts cutting forecasts for earnings. Economic data has been weak to start the year, and I think it's going to be a poor earnings season, and this is a top. Like, maybe we get back to the highs. We even break the highs, blow it off. But I think to me now is the time where you want to be a little more defensive. I don't think, the way the Fed's set up, I don't think you're going back down to the bottoms, but I don't think there's much more in the upside here. So there's got to be some other way to make money until the Fed decides it's going to start cutting.
How about a pullback, Adam, like, 50% back towards, 26.40, 26.30? Does that seem viable to you?
I think it does. I think, you get that, start to get some selling into the summer. That's the way it completely sets up for me. I'm still long here, and I think it's been impressive every day. You kind of get a little bit of taste of negativity. You've got some of these IPOs coming up, but I was really disappointed in the Lyft IPO. I think retail is going to feel pretty burned by that. And now you've got all these other ones that might start to sag. And I think it's been a nice run, and this is it for the year. I think you're, probably still belong here.
Okay, so then, you brought up the Fed. We can go to yields, and we peaked at 3.25, all the way down to 2.35 in the 10-year. Recently, having a bounce that may be corrective, or if you're right, and there is some economic weakness, and I do want to bring up like copper. You already brought up oil, but any view on bonds? We had the DSI a few weeks ago up around above 80% or so on bonds before this recent pullback. Do you have a view on treasuries and yields going forward? And is there anything in April seasonally wise that we should be paying attention to on rates?
Right, sure. Yeah, there's the yields on. So you got a little bit of a bias towards lower yields, so it's higher price. But if you look through the numbers, I mean, it's all over the place.
Yeah.
So I wouldn't expect a single from that April, May bias in rates. For me, I think it's tough to get much lower until you see a lot of bad economic data. I mean, non-farm payrolls was all right this month. I mean, there's been nothing where you can say it's been terrible. I mean, even if you have a 4-point miss on ISM non-manufacturing, it's still well above 50. Chinese data has been ticking higher. I think it's Chinese trade on Friday. So that's going to be probably the most important data point of the week. Although you could probably argue it's bad. It's just a trade war skew. The one that I'm really watching to capture that overall sentiment is Aussie yen, and it's the world's most boring chart right now. Here it is since the start of the year. You had the flash crash in January, and it's just chopped between 77.50 and just below 80. So it's about a 3% range. We're up near the top of it right now, and for me, whichever way that one goes is going to be the big tell. And when it breaks, it's going to take everything with it. I mean, it's the classic old kind of carry trade, global sensitive.
Yeah. So this is your
story.
This is your risk on, risk off tell that you really pay attention to, right?
It is. You've had this risk on trade. It hasn't been able to go up. I mean, if you look at Australia, it hasn't really done that well. So it's telling you, all right, the only reason stocks are back where they are is because the Fed has pivoted, because rates have come down, and that helps corporate borrowing. It's not saying we're getting better growth ahead globally or in any sense. And so
this has been a jawbone rally then, Adam, without Aussie yen confirming it.
Well, and you're going to see it in the earnings coming up. I mean, you can't really have stocks going up forever if you're not growing earnings. So, and if you're not growing global growth, you can't have the Australian dollar staying up here. I mean, they'll be cutting rates in the second half of the year. And I think this is the big tell. And it's such a boring trade right now because it's tough to make money in the 3% range. But once it goes, I think you're going to get it to go, quite a bit. And up to back down to these flash crash lows or up to 84 in fairly short order. So that's the big barometer that I'm just waiting on. That's what trading is, right, Dale? It's just waiting and being patient. And
You have to be willing to sit there and do nothing for a long time, which most people have a very difficult time doing, including myself. And just it has to be so compelling that you're going to feel worse about not taking a trade than being stopped out on a trade. So that to me is compelling. And since you brought up Aussie yen, you know, we had a very nice move on the long side in Aussie Kiwi with what New Zealand Central Bank did. Do you look for a continuation of Aussie holding up better than Kiwi?
Well, that's been this kind of paradigm, right, with these central bank kind of shifts. That's a 1 hour chart, bring up the daily for Aussie Kiwi. And it has been that nice snapback rally, but I think the other shoe to drop is the RBA saying, all right, we are going to cut. So, you know, I don't love it as something to hold up. I mean, industrial metals prices have done a lot better. You mentioned copper.
Yeah,
it is. Copper, it's so skewed by supply issues and what's happening in China, though. You know, China signaled it wasn't taking Australian iron ore imports in a few ports. So, you know, there's this dispute going on there that may skew Chinese trade or Australian trade data, might skew economic data, and it might trick the RBA into cutting. And it might not be that bad, but you know, I'm not terribly upbeat about the global growth right now. 2%, you know, global GDP growth. Europe is in a terrible spot. China's stimulating, and that's kind of the big bet that they're going to be able to raise everyone with them. But how much do they want to go? You know, there's going to be a huge sell the fact once a trade deal's done.
Okay.
And
I'll tell you what, Adam. You know, thanks for reminding me how much I missed hearing your commentary over all these months. You know, you were always one of my favorite guests because you really crystallize things. There's not a question I can ask that you don't have some very good reasoning and narratives for. The best way to follow you, Adam, is on Twitter at Forex Live. And if you want to show Forex Live's website, now would be a great time to do it. But I thank you so much for coming in here today, Adam, and you know, giving us and sharing all your great views. You're kind of a rare breed, Adam. You have put together fundamentals and technicals. You've married them in a way that very few can do. And you know, I'm a fan of Adam Button.
Oh, yeah, that's humbling. Yeah, thanks so much for having me on. It's good to be back on again. Why would we don't do this more often? I get just stuck in my head, so it's nice to spit it out once in a while rather than just typing it on keyboard. So thanks for being a great start to my week. This was fun.
Thank you, Adam, and go to Forex Live. And Adam has a great crew with Greg Michalowski as well. And Adam, thank you so much for giving me some ideas and confirming some that I already had. Anytime a pro like you can back up and give me confirmation on what I'm thinking and what I'm doing in the markets, it adds conviction to what I'm doing. So thanks again, my trading warrior brother, Adam Button, for being with us and edifying faith today, buddy.
Thanks a lot, Dale. Hope to hear from you soon.
All right, buddy. Okay, that's a wrap. See everyone for Turnaround Tuesday. Remember, don't just count your pips, count your blessings. And see everyone tomorrow. Good hunting the rest of the day. Remember, be part of our family. And right now, you could go into members chat, see what Blake's doing and the rest of the pros for the rest of the day. Adios, everyone, and see you tomorrow. Thank you for your attention.